Hello, clients, friends. This is Glenn Starr, and it's my pleasure to welcome you to our presentation today. This year, 2021, marks my 29th year as a financial advisor, and I want to thank each of my clients that I've had the pleasure to know, and there's many of you that started this journey with me from the beginning. I truly thank each of you for your business and especially for your friendship. Thank you. Before we begin, I want to review 5 areas where we work in the field of financial planning. Every person accumulating financial assets for retirement should have a written, date-specific, dollar-specific accumulation plan they are working toward to hopefully reach their retirement number. Few know what their number is, and fewer still know how to calculate that number. We do. Identifying retirement income need coupled with Social Security planning, rollovers of retirement plans, and many other factors a retiree faces are critical components for your financial well-being. Financial planning helps clients identify the different risks we all face. Now, many people think of risk only in terms of the stock market going down. But I believe the number one risk we all face is the very real possibility that we might run out of money in retirement. Without a financial plan, households that enter retirement with a fixed income will likely find that the erosion of purchasing power with their money due to inflation is the real risk we all face. Financial planning addresses these and many other risks as well, including various risks that can be addressed through insurance like life insurance or long-term care insurance. Now, we don't hold ourselves out as tax advisors, and we certainly don't prepare tax returns, but we do review our clients' tax returns and attempt to stay on top of the ever-changing taxation issues, and we'll assist clients with their tax advisors as needed. Regardless of the size of your account and your estate, everybody needs to have a current will and a plan to transfer whatever legacy they leave to whomever they wish in a cost-efficient manner and with as few problems as possible. We don't do the legal work here either, but we do identify and help educate our clients in numerous subjects regarding estate taxes and planning strategies that may be pertinent to you. We'll make referrals as needed to appropriate legal professionals and assist clients with their attorneys as needed. I've come to realize just how humbling it is to work with those that have inherited the legacy of our dear clients after their passing, and in some instances, even 3rd and 4th generations I get to work with past those clients. As a comprehensive financial services firm, we always try to consider the impact of any investment recommendations we make on not just one, but all of these areas. In summary, financial planning involves making assumptions, calculating projections into the future, and considering many variables and many unknowns. After a little time goes by, those assumptions, projections, and variables inevitably change. And therefore, a financial plan should be revisited every year. When more information becomes known, you adjust the financial plan only as needed, only when needed. That's my purpose. That's the kind of work we do, and I love doing this kind of work. I understand the mathematics involved. I understand the limitations involved, and I enjoy communicating what admittedly can be a complex subject in a simplified manner and repeating this message as often as needed. Today, our agenda is going to be kind of simple. We'll look back at the markets in 2020, of course, with the clarity of hindsight and what I like to call 2020 vision. Next, and what's probably admittedly a futile exercise, because nobody can consistently predict the future direction of the markets and the economy, we'll provide some resources for all the info desired and touch on some areas for investor awareness in 2021. I'm going to touch on the subject of perspective, and then I'm going to wrap up today's presentation with some messages I hope stays with you. Here's the hindsight. It's a graph of the S&P 500 in 2020. From the beginning to the end of 2020, the annualized return for the S&P 500 was in excess of 16%. And that didn't include any dividends that were paid. Now you can clearly see the pandemic-related pullback in the March timeframe. Note the magnitude of this pullback. That wasn't out of the ordinary. About every 5 years or so, for some reason or another, the market seems to pull back by about that amount. Probably many of you heard me say this before. It's always something. But what was out of the ordinary was just how fast it went down, and then how fast we saw prices recover. Now, a lot of people attribute this recovery to a number of factors. Yeah, the largest federal government stimulus ever. And the Federal Reserve was very accommodating. But you know, what I believe most important is that we eventually, as people saw and believed the optimism about how quickly the economy is likely to bounce back from this pandemic. The fact that a pandemic-induced shutdown was absorbed by the markets and the investments, despite all of this apocalyptic news reporting we get bombarded with daily, the way the stock market ended, yeah, that's truly historic. And I hope you'll enjoy me in the optimism that people have exhibited throughout history, dealing with all the problems and uncertainties in the past. And we'll again do so in the future with all the new problems and all the new uncertainties that we will face, because that's what people do. Most of my clients know I like to use metaphors and analogies, and this graph reminds me of the turbulence that a passenger on an airplane might have experienced on a trip. Early in the flight, with that kind of turbulence, what do you think the pilot said? He probably said, let's all sit down, buckle up. We've been through this before. It won't be fun, but we'll get there. And those that did sit down and buckle up were probably glad they did. You know, with the clarity of hindsight, I've never seen a time where the S&P 500 went down that it did not come back and go higher. The unknown's always been, well, how much and when will it recover? Now, our compliance function has me remind everyone that, well, past performance is no guarantee of the future. Nope, we still can't predict the future. But clearly, investors that were able to stay the course were well rewarded. But remember, none of this market review information is meant to diminish or minimize in any way possible the human cost associated with this pandemic. The deaths generally are tragic. On a personal note, I recall as I was growing up, my mother, who was the youngest of 13, shared the story numerous times actually about one of her older brothers at the age of 20 was a victim of the 1918 Spanish flu and how the whole family was down with the flu. Yeah, the deaths are tragic. In fact, we're reminded daily of the human cost of this pandemic through the nonstop reporting of numerous tragic statistics. Yet there's still many reasons to be optimistic. Vaccines were developed in record time, thanks to the people in the companies that had the knowledge, the capability, and the expertise to accomplish great things when needed most. And everyone who wants to be vaccinated will likely be able to receive a vaccination soon. This is a monumental accomplishment in a short period of time. I believe there's great optimism in the equity markets about how quickly the economy will rebound in 2021. But it's important to be reminded the stock market is forward looking. That means current prices reflect more about future expectations than whatever is happening at the moment. Yeah, there are many segments of our economy and companies that were hurt in 2020, and some businesses were virtually destroyed by the government mandated shutdowns. Then there were other segments and companies that, quite frankly, did very well because they provided the means for people to adapt to new ways of conducting business, especially remotely. Large companies will have an effect on your investments, whether it's up or down. The three companies on the right accounted for about half of the S&P 500's return. ExxonMobil, on the other hand, was down 40% in 2020, and travel-related companies, they were crushed. Now, these examples, I believe, make the case again for a well-diversified, properly allocated portfolio of investments. Companies are made up of people who go to work every day to innovate and to adapt and adjust to the ever-changing conditions they face in their markets. That's human ingenuity, and it's awesome. Remote workplaces have almost become the norm, and even I'm adapting by participating in this remote work, by just undertaking this very presentation and sharing it remotely. I guess the only constant in life is change. We saw interest rates get slashed in 2020, starting already at low interest rates. Low interest rates are good for borrowers, but not so good for savers. And the Federal Reserve announced in December that they expect interest rates to stay zero for the foreseeable future. We'll see, because they can change their mind, can't they? LPL's research department published their outlook for 2021. And this is one of those resources that I mentioned where more information is available. And if anybody wants a copy of this, give us a call, send me an email, and we'll send a copy either by email or by regular mail if needed. Just to summarize, this report talks about the pandemic and the advances we've seen, expected further advances, knowing it's all a process. And government policies matter, certainly, but not so much the politics. There is a difference between policies and politics. Earnings are expected to rebound in 2021 and even grow further through innovation and cost efficiencies. And that's always a positive for stocks. And even though the Fed's expected to keep low rates, if by chance we do see inflation, that could put some pressure on bond prices should rates increase. We'll see though. One of the things that is predicted in LPL's report is a GDP growth of 4 to 5%. Just be aware that the stock market may have already priced into the current values some of this GDP expectations. One of the caveats in the fine print on this slide is forecasts set forth may not develop as predicted and are subject to change. So with the economic decline we experienced in 2020, this kind of rebound in GDP may actually only get us back to where we started at the beginning of 2020. Kind of like a weather forecast, I guess. We'll eventually see if it happens. Every 4 years, we get a presidential election, and it's tempting to overemphasize the importance of elections and investment strategies. Yeah, we've got a new administration. That means we'll have some different policies, and for better or worse, those policies likely will affect the earnings of companies. And always remember, if punitive government policies make something difficult for a company, people in those companies simply adjust, adapt, and innovate where necessary because that's what people do. It's the company's future earnings that we invest in. And it's the expected earnings that are reflected by the stock market. It's not politics. I haven't seen any correlations between politics and stock market valuations that I'm willing to hang my hat upon. But if you're wondering, there were some statistics put out by a research firm in New York that shows what happens when there's a Democrat president, Democrat House, and a Democrat Senate. It may be nice to look at, but it's not a tell-all sign of the future. I'm not convinced there's much, if any, merit in such a narrow correlation. The economy doesn't hinge predominantly upon which political party is in the majority. My advice with something like this is just take it with a grain of salt. Someone could easily use different criteria for the data and find different statistics that support an entirely different result. And if anyone desires, just give me a call and we'll talk about the 3 biggest lies and where statistics fall in that discussion. All the analysts have out their crystal ball, and from what I read, they all think the stock market's actually going to be pretty favorable in 2021. Barron's surveyed a number of different companies and reported that, well, the average is about 9%. Throw in a dividend yield of 1.5 to 2%, and we may get a 10 to 11% total return in 2021. I don't know. LPL's research has the same thing, but you know what? Our top priority when it comes to our guiding factors for our advice and recommendations, they're based upon your unique financial situation, your goals, your objectives. We do not attempt to predict, time, nor even trade the stock market when it comes to your financial needs. We wake up every day with many uncertainties in good times and bad. Turn on the TV and you'll get a continuous rundown of everything you could fret over or speculate about. It's nonstop. Seems like the news media attempts to jerk our emotions all day long. In fact, watch a financial-oriented news channel and you could either be entertained all day long or maybe get depressed between all the ifs and mights that they conjecture about and prognosticate every single day. Excuse me. Let me share my outlook for 2021. Let's just keep our expectations down. I'd be delighted with just a ho-hum 2021. Then we can just keep working your plan without all the drama. That's my outlook. A quick note about perspective. There was a picture making the rounds on the internet and I saw it and it reminded me of the value of perspective. Let's say you see a picture like this and then the media tries to conjure up something bad like, is that lion eating that cub? Sometimes I think the media tries to spin a story and give us that one perspective. But a different perspective reveals that everything's okay. I think we help our clients most by having that different perspective with their financial circumstances. Here are the important things that I hope you will remember. Seems like it's always something we can't predict or anticipate that catches us by surprise. Markets go up, markets go down. We just never know when or how much. When it comes to your investments, tune out the politics. We'll adapt and adjust to the policies as needed. Another analogy I like to use is the stylist or the barber that cuts your hair probably has some better tools, some training, and likely more experience than we might have if we were to try to cut our own hair. But one thing that stylist or barber has that would be hard, if not impossible for us to get, is their perspective on our head of hair. It's a simple comparison, I know, but I believe as your financial advisor, we bring that unique perspective to your financial situation. Finally, when a plan is put in place that addresses your goals and objectives, you got to keep working that plan through all the turbulence in the market. Make changes based upon your situation, not what the market may or may not be doing. Legendary portfolio manager Peter Lynch understood that it's time in the market, not timing the market. Investing is long term through all cycles, up and down of the market and the economy. What you can expect from us this coming year is communication. We're always available to discuss any issue, particularly if that issue deals with your financial situation. Seriously, we welcome your phone call at any time. We're going to do more of these types of presentations in an effort to reach our clients more often. But this isn't a substitute for us talking. I still want to talk to each and every one of you. And I'm investing in more technology in my own office that will permit us to talk and work together as if we were actually in my office. Excuse me. You can expect that we'll stay informed of changes and their effect that will come our way with a new presidential administration. They always make changes. We will continue to review the economic issues and the tax issues, estate planning issue, and investment issues for our clients. I know we'll be offering other workshops like this, focusing on tax changes yet to come and other planning topics and ideas. One of my personal goals in 2021 is to help more of the younger workforce and pre-retirees understand the need and how to prepare for their own financial success through their life's journey. Everyone has that retirement number I previously described, and they need to know it. I'll help anybody define and calculate that retirement number for anybody that wants it, without any cost nor any obligation to them. My clients know I love doing this. I love sharing my experiences and perspectives in a common sense fashion with others. If you have children or grandchildren or friends that I can lend any assistance to, please share this information with them and encourage them to contact us. You can add names to those that we distribute this information to, and sometimes there's been a lot of our good clients and our best clients that referred to us by existing clients throughout my career, and I thank you from the bottom of my heart. Please feel comfortable letting us know the names of anyone you feel could benefit from this information. We're happy to add them, and I believe our clients would agree. We don't attempt to high pressure anybody into anything. Here's the fine print, and we're independent but yet affiliated with LPL Financial Securities for all the regulatory requirements of our industry, and most of the opinions expressed herein, they're all mine. We'll learn more with every tomorrow, and we could change our mind on something. I sourced most of this information from other resources, and everything is pretty much generalized and may or may not apply specifically to you. And I'm willing to discuss your personal situation further and refer to outside professionals when we get outside of my particular expertise. If we reference an index like the S&P 500 or the Dow Jones Industrial Average, that specific index is really just a mathematical calculation. And it's been developed to be representative of the stock market according to whatever criteria the creator of that index put in place and has defined. Yeah, you can invest directly into that particular mathematical calculation. And there's a lot more factors that go into any specific result that you may experience. Our goal is to keep you informed, and thank you for watching our update. We appreciate the opportunity to assist you with your financial needs, and thank you for your business. Let us know your thoughts. Call us if you have any questions. And don't forget, if you want or desire LPL's Outlook 2021 report, just let us know. Phone call or an email. Best wishes for a great and healthy 2021. Thanks.